Yeah, hello and welcome to another update video about AGIX. AGIX chart still looks decent, okay, so it's still climbing higher. What we'll do in this video, talk about the structure, talk about the next upside levels to watch, talk about the support area and the micro support levels, as well as the adjusted support area that, well, we have to adjust it in the video, so we'll do that together. Yeah, the overall structure still, as mentioned yesterday, is still intact. So we're still looking here at an A, B, C structure most likely. Yeah, I mean, it could be something more bullish, okay, based on this. But first of all, let's see if it even fills in this structure. Yeah, what would be this structure, or what would be the target? So first of all, the initial move up was a three-wave move. The move down was a corrective, three-wave structure. It's not actually in three waves, it's actually a five-wave move down, but the only way to count it, and we did that at the time, I just took it off the chart to keep it sort of tidy and keep it clean. It's basically a WXYXZ structure. Okay, so it's a very complex corrective form, but that's all past history. The move up would now be a C-wave rally, and it's basically a five-wave pattern that I'm watching for. Now, it should be, the third wave is already extended, could top at any point, but the bigger picture, okay, the overall target for the C wave, if this is the correct assumption, and I can always be wrong, or the chart just takes a different route, that's completely normal with altcoins, but ideally, the C wave reaches the 1-to-1 ratio, 100% extension level. That's at $3.32. That's what we would normally want to see, because a C wave often has the same length as the A wave. That's one level to watch. They can always extend higher, so even the 1.236 or 1.38 extension levels, they are not unusual here for AGIX, for example, for a C wave. And also, in addition to that, a C wave should have 5 waves. I only see 3 at the moment. So should really go higher, at least if we talk about what an ideal structure would look like. Now, there are other structures that could apply here that will throw out the weak hands, basically the leveraged money, that could still be bullish, but that certainly would create some nervousness and stress people out. I give you one example, but this is only an alternative until I see evidence for it. So it could be a large diagonal. For example, it could be this, and I will change the color and wave degree. No, not the color, but the wave degree, so you see it better. Basically, that this was not an A wave, but a wave 1, but only in 3 waves. The move down was a wave 2 instead of a B wave. The move up now would be a wave 3, but that wave 3, because we're dealing with a diagonal, could be a large ABC structure, like, for example, A, B, C. So while I give you support for the yellow count, if we break it, we might explore an ABC structure in wave 3, because the wave 1 would also be an ABC, and the wave 5 should be as well. So that would be, let's say, an alternative that we need to consider, which would allow for a deeper pullback before we carry on higher. This scenario certainly would be invalidated below, 15 cents. Now that's far away, but it tells you a lot about the risk, okay? But that's the invalidation point. I mean, the ideal support for that would be higher, but it would still be quite far away from the current price. So we talk about, 25 to 47 cents, far away, crazy risk. So, but we have an upper support area that we track directly. So from a structural point of view, the idea would be we are now in the C wave. So I'm leaning towards that yellow count, and a break below that micro support area would be first indication that it's not going to fill in the yellow count, but maybe something different like that ABC structure in the white count. I've just adjusted the support area. This is the support range that would be relevant for a wave 4 pullback. There's currently no sign that this wave 4 pullback has started. And it's between 57.6 and 91.6 cents here, this support area. And at some point, a wave 4 should get into this region, but probably not yet. I mean, it's at the moment the area where this wave 4 pullback could start, but there's no sign at the moment that it's starting. And it could all happen very quickly. I mean, if we, those initial pullbacks can be very quickly. So if we, however, take a look at the structure here, the wave 2, lasted basically a month. Depends on probably from here. Start from there. Okay, end of December to end, so 3 to 4 weeks. So that would suggest that the wave 4 should also take at least a couple of weeks or so to have that proportion. So that would give some time to get positioned for anybody who wants to trade wave 5. That third wave can still extend. Extension levels for the third wave are listed here. 129, 178, 217 are the next levels to watch where the price could get rejected. But there is no limit. So third waves, especially the AI hype, can drive them higher. Okay, so just these are the next levels to watch. There's some confluence around 172, 178, so around 170 to 180. There's some confluence before it goes higher to 217. So the ideal targets for a third are fulfilled. So now it's just about, okay, how far can it go? We're adjusting support, and it tells you a lot about the risk because 91 cents to 57 cents is support. So that is the drawdown, even in a bullish scenario, we have to accept. Yeah, so looking at the proportions, however, if we want to get to 331, ideally though, the third wave maybe goes a little higher before that fourth wave pullback starts. And then it needs to hold the 50% Fibonacci level to keep going in the yellow count. So yeah, and if we take a look at the shorter time frame, literally, there's no micro count that would really give us a high probability scenario here. There's just not that clarity in the chart, but I still see this as a third wave at the moment. So this might have been some kind of a fourth wave pullback in wave 3, and we're now grinding a bit higher. Yeah, first early indication that some kind of a top is in place is a break below the last swing low at $1.06. So that's the earliest indication some kind of a pullback is unfolding, but it's not a confirmation, really. We need more price data. We actually need to get a dip into that support region to really say, okay, that's the wave 4. So we will have to assess it as we go. In the meantime, partial profit taking is certainly not a bad idea. Good strategy can be to take the initial investment out, and then just let it run, see where it takes us. But in all likelihood, the bull market isn't over yet, so it should still grind a bit higher. Yeah, that's my update about AGIX. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.